Wednesday, March 18th, 2020, MONERO 64, home of alternative economics and contrarian views. So the central bankers and the government treasuries are throwing everything at the system. And despite that, the system or the markets continue to melt down. We're seeing treasury yields now spike higher. We're seeing Italian government paper yields also spike higher, especially Italian and Spanish, the ones that were at the core of the debt crisis, sovereign debt crisis back in 2012. It looks like the debt crisis is starting again in Europe. And why are the markets not reacting positively to all this largesse, which I will come to in a minute. It's difficult to keep track of all the programs the Fed has announced of late. But my opinion to why things are not turning on a dime, so to speak, why all this stimulus is not working for now. And I have to admit, it could work later, but I personally doubt it. My feeling is that it's the debt and the deficits. For many years, people have thought that deficits and debt don't matter, right? And I think it was Dick Cheney even said that once, that deficits didn't matter. And they were proven right for a very long time. But I think we're coming to a point where investors are actually saying no more. And because all this stimulus, of course, is more debt on a system that already incurred trillions and trillions of debt after the '08 crisis to patch up the system. There was nothing fixed. If anything, things got more and more bubblish. The debt increased. Recklessness increased as well on Wall Street, not only amongst the big banks, the big players, but Wall Street and the City of London. They transferred that recklessness also to Main Street through financial products that are very risky. And of course, it's going to be painful for everyone, not just Wall Street, the small investor as well. So that's what I think is happening. Back in 1980, 81, the debt to GDP, when Reagan came to power, public debt to GDP was like 36%. So yeah, there was room for the bubble to grow. But now we're above 100% in the US. And there are many studies that say that the economy does not grow well longer term with the debt GDP over 90%. A lot of people were hoping that Western countries, especially the US, could go the way of Japan, increase the debt and keep muddling through, or as some would call it, whimpering along. But yeah, it looks like this is not working right now. So before I look at where the markets are this morning, let's go through some of the actions of the Federal Reserve and the Treasuries or Congress and the UK as well. They've announced some measures. Well, all the central banks, of course, are cutting rates. The Fed has cut rates. They were at 1.5 to 175 before this crisis started. They're now at zero to a quarter. They announced 700 billion in QE. They've been supporting the repo market since September. They're not going to be able to taper. If anything, they're increasing the size of the help. They've added another potential 1.5 trillion to the repo. Don't forget that money, I'll give them credit, hasn't been put into the system. It's just available, but it's 1.5 trillion. Yesterday they announced, what did they announce yesterday? A couple of things. They're going to launch commercial paper funding facility amid the crisis. This is to help industrial corporations that borrow in the commercial paper market. This is not Wall Street. And the reason they're doing this is because Wall Street has its own problems. They don't even trust each other on Wall Street, let alone lend to industrial corporations, especially with what's going on. So they've had to launch that, the commercial paper funding facility. And later, yesterday, after they announced that, they said they're going to relaunch primary dealer credit facility. So what does that mean? Well, it means that they will allow financial institutions to use other assets other than treasuries and mortgage-backed securities or agency bonds as collateral to borrow from the Fed. They'll be able to bring corporate bonds, stocks. So what about the UK? Well, Sunak promises 350 billion emergency rescue for business. So that's the Chancellor of the Exchequer, the US Treasury Secretary equivalent in the UK. Of course, the Bank of England cut rates the other day from 75 basis points to 25 basis points, almost to zero. And they were supposed to cut rates probably on the 26th of March. They did it as well as an emergency. The ECB hasn't really been too forceful. They have announced some programs. Bank of Japan, I saw that they've doubled the amount of QE they're buying more and more ETFs. We've seen the New Zealand Central Bank cut the other day. They're all desperate, and I'm sure a lot more governments are going to, how can I say, flood the fiscal system. They're going to try to stimulate through fiscal measures, and that always means more debt. I saw yesterday as well, Mnuchin is looking for 850 billion, maybe $1 trillion from Congress, stimulus as well. So it's getting crazy, and you'd think, well, all this stuff should help the markets, should help bring back confidence. But what I think is happening, is the loss of faith and confidence. They had 11 years to wean off all this debt. Bernanke thought, of course, that all the debt, all the QE, all the zero rates would stimulate the economy. The growth would overcome the debt, and the debt would, how can I say, be written off through higher growth rates than growth in debt. But that hasn't happened. So now we come to a recession, and there's nothing to show for. So there's no monetary ammunition. There's no fiscal ammunition. So let's go look at what the markets are doing this morning. It's 7:42 a.m. Billy, by the way, we designed a t-shirt and mug. People have been asking for it. It's called Billy Airways, Fly with a Silver Lining, funded by real capitalists and not taxpayers. This is to show that we are against all these corporate bailouts. People are talking about bailing out the airlines, bailing out Boeing, bailing out everyone. It looks like everyone now wants to live at the expense of everyone else. They think they can do that, and it doesn't make sense. So let's look at the markets now. First, let's look at the bond market. We'll start with the Treasury market. Right now, the 10-year yield is up 7 basis points at 107. The 30-year is almost back up to 2%. Don't forget, we went down to like 0.7 the other day. We're up 14 basis points. So now let's look at some of the European government bond yields, especially the Italian and the Spanish. So we've got the 10-year Italian here at almost at 240. But as you can see, a month ago, the 10-year yield in Italy was under 1%. So we've gone up over 100 basis points in the Italian 10-year yield. The other thing that's important is the spread between that 10-year yield and the German yield. That's spiking a lot higher. That's a bad sign. The Italians followed that very closely. The BTP, Bund spread, Il spread, they call it. It's very closely followed in Italy and is a symptom of crisis when that spread widens. Spain, let's have a look at Spain. The 10-year yield in Spain is up 8 basis points today at 113. Let's see, a month ago, the 10-year yield was below 50 basis points. Yeah, it's still relatively low at 113, but it could move up a lot higher. So let's look at the stock market now. You would have expected, of course, the Dow to be up as treasury yields are up as well, but it's not. Right now, we're limit down again in the stock market. The Dow futures, S&P futures, and NASDAQ 100 futures are all limit down. They're all down more than 5%. Precious metals are getting hit again, even though overnight they're quite strong. Gold got up to 1547. Now we're testing 1500. Am I concerned? No. There's dozens of stories out there where people can't get a hold of any physical gold and silver, any real metal. I've heard as well that the premiums are very high. So don't get rid of your precious metals, because if you do, you're going to have to put that money with a bank. Do you really want to have your money with a bank right now? That's how you need to think. So we're at 1500 right now, down 29. The range has been 1495 to 1546. A lot of volatility. Silver, earlier this morning, I got up quite early and I had a look. Silver was actually up 20 cents while gold was actually unchanged. So silver has done well, but now we're back down to 1236. It's down 22 or 1.8%. But if you consider where the stock market is, down more than 5%, gold and silver are actually outperforming the stock market. What about the currencies? We saw kind of a bloodbath yesterday in the euro and the British pound. That's a symptom that liquidity is drying up, that the European and British banks are having a tough time access dollars. So they dropped like 2%. The pound is testing 120, which is a key support. Right now, pound is down 0.1% at 120.40. Euro is down 0.18 at 109.78. The dollar is down 1/3% versus the yen at 107.30. And the dollar is up 1/4% against the Chinese yuan at 704.80. Yeah, crude oil is looking really bad, the WTI. That's another bad sign for the system. We are making, I think it's 16-year lows. We broke the 2016 low at around above 27 right now. WTI is down 2.7% at 26.60. So right near the lows. And as I said, it's a 16-year low. Another thing I wanted to point out is the Brazilian real. I sent a message late last year to an old friend of mine in Brazil. We went to the same school. We weren't in the same class, but we went to the American school in Rio. We used to play golf quite a bit with his brothers. His sister also played golf. And I keep in touch with him. And he lives in the south of Brazil now. His family own a farm in the south of Brazil. And I sent him this chart. It's the Brazilian real. And at that time, we're testing that the top of that teacup formation. And I told him, I think we're going to go a lot higher. You know, the real is going to drop. Look at that. Some people say that technical analysis doesn't work. It's worked perfectly, that teacup formation. We've broken out of the handle, and the dollar went above 5 versus the real. At the time, we're just above 4. And I sent him a message overnight, and I got a reply this morning, and he said, yeah, thank you for that. I did close out, I did a little trade, even though he works in farming, agriculture, and he's happy with the profit. It's of course not a good sign for Brazil or anyone, I guess. Just wanted to show you how, technical analysis is not dead. So let's keep an eye on things, of course, as usual. But it looks to me that faith and confidence is melting away very, very quickly. And I still think we're not that far away from the ICE 9 analogy that Jim Rickards talks about. What does that mean? Well, that's the total lockdown of the financial system. For how long? Who knows? So if you enjoyed this video, make sure you hit the like button, share it far and wide. Think about subscribing to the channel if you haven't yet. You can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.